What's a 1031 exchange? I'm Bob DePasquale from Initiate Impact Virtual Family Offices, and today we're going to talk a little bit about a special home sale transaction. Did you know that if you sell your home, you can exclude up to $250,000 of capital gains if you've lived in the home for at least 2 out of the last 5 years? And if you're married, you and your spouse can combine the $250,000 to equal $500,000. That's $500,000 of tax exemption. Well, just so you know, this is calculated by subtracting from the sales price your original purchase price and then money that you've put into the home for improvements. So for example, if you sold your home for $800,000, but you bought it for $500,000 and put $100,000 of improvements into it, that means your cost basis is $600,000. The $500 purchase plus the $100 you put in. You subtract that from the $800 you sold it for, and you would have a $200,000 capital gain. Now, if today's rules still apply when you did that, that $200,000 would be completely exempt from taxes. Now remember, this is towards your primary residence. You must have lived there for 2 out of the preceding 5 years. So if this is some kind of rental property or vacation home that you don't spend any time in, then it's not going to apply. But fear not, there could be another solution, and that's where the 1031 exchange comes in. A 1031 exchange would be when you sell that investment property, but then purchase a new one. And there's certain rules that apply, and we'll go over those now. You must identify the next property or properties within 45 days of the sale. And there are other rules too, but this is the most important part of it. The buyer must be the same taxpayer as the property that was previously sold. The mortgage of the new property must be equal to or a higher value than the property that was sold. The purchase price must meet or exceed the price of the previous property. You must obtain a qualified intermediary. In other words, you cannot take hold of the cash upon the sale. That other party has to hold the cash before it's invested into the new property. Another thing to consider is that these are thoughts and ideas around a property that you originally purchased. If this was an inherited property, the rules would be a bit different because you would likely receive a step up in cost basis. So in other words, when you inherited the property, the price at the date of death of the person you inherited it from is what is your cost basis. So that will affect your capital gains upon sale, usually in a good way. As with any of these complicated transactions that we talk about in our video series, we always recommend you consult a professional, especially in this scenario from a tax perspective. A CPA can be very helpful. You can always ask us as well, and we'd be glad to help you find the information. And if we don't know exactly where to find it, we will point you in the right direction. And one other thing, before you go through transactions like this, we always recommend considering why you'll do it, what the pros and cons will be, and ask yourself a couple questions. And 2 that come to mind for me in this case are, and do you have other income, or will you need income from this source upon the sale? I ask these because this might be the largest capital gain that you'll have in your entire life. If you get a bunch of money, what are you going to do with it? You want to have a plan, or at least a general idea, before that money becomes available to you. Could you imagine inheriting or gathering all that type of money and then not knowing what to do with it and potentially making a bad decision? So consider those things before the transaction. Not to convince you to not do the transaction. In fact, you might even be more likely to do it once you consider what you have available to you once the transaction happens. But we just encourage you to think through these things before you have a sudden chunk of money in your checking account, assuming you're not doing the 1031 exchange that we talked about a moment ago. All in all, there are some great rules for home sellers these days, whether they're your primary residence or an investment property. So always consult a professional and really consider those options because there are some great ones for you. We'd be more than happy to help. I'm Bob DePasquale at Initiate Impact Virtual Family Offices, wishing you a generous rest of your week.